Right, so before we proceed, and as the panel gets prepared, I'd like to give a special mention to the team from Afrika-Verein who've been behind this event for the last 4 months. So I'd like to give a special mention to Angela Bern-Eiser, Berit Burger. I'd also like to thank Claudia Voss and Lista Steinbacher, Peggy Schulz, Asmao Nitadi, Kadi Kamara, Sausi Sisse, and Anna Reiner, supported by Verena, Constance, Eloise, and Suzanne. Thank you all for putting this event together. Now, they say in my mother tongue, I'm from Kenya, as I mentioned, and I speak a language known as Kikuyu. There's a beautiful phrase which says, "Murigo urito hagiraiko beine," which is to say that the load that you've harvested gets heaviest at the granary. We're just about to get close to the end, and I'm sure we're all feeling tired, but hang in there. We have a lot more discussion happening, and I'd like to invite a lady panelist on the stage. Good change, Dr. Evita Schmig. She's an associate from the German Institute of International and Security Affairs, and she'll be taking us through the next 1-hour session. Thank you.
Yeah, thank you very much for that nice introduction, and thank you for all of those who are still here. I'm convinced we'll have a very lively panel. We will be speaking about the trade and investment linkage, so we will put a little bit the compact in a larger perspective. And I'm very glad to have here a very distinguished panel, which is Honorable Minister Biotchané de Benin, Minister of Planning and Development. Bienvenue. Hans-Peter Lankes, he is in IFC, and he is responsible there for the compact with Africa. Thanks for coming. We have, Enke Mikvedor, who is from Togo Trade and Invest. Now, trade, how is it called? Sorry? Togo Invest. Welcome, bienvenue. Honorable Minister Amr Nasser from Egypt. He is the Minister of Trade and Industry. Thank you for coming. And we have Werner Schmidt from Deutsche Bank AG, who is very much involved in financing and risk assessment. Thank you for bringing your expertise to this panel. So as I said, we will this time just go more from the investment side a little bit to the trade side. And before posing questions to my panelists, I would just like to give you some words or some highlight some points as a background with regard to trade. And I would ask my panelists then later to pick some of these elements and come back and comment on that. First point, the European Union is granting the majority of African countries duty-free, market-free market access. That means very good access in the European market. Northern African countries do have association agreements. That means far-reaching preferences, especially in the area of finished products. But despite all these preferences, Africa doesn't have a large share in the European market. So the question, one of the questions, you know, I like to be a little bit provocative for people to really start discussing. So what I ask myself is then, are all these trade preferences useless? What is the meaning of free trade agreements? Do they serve? Do they have any purpose? Or do we see that other factors like the internal framework conditions on which the compact touches upon, that these are maybe even more important than free trade agreements? Second point, free trade agreements or trade can be really helpful to support sustainable investment under certain conditions. What we see in Africa is that since a long time, African exports have been heavily concentrated on raw materials. So there is not a lot of value addition. And this is something that is to change and shall change, and also with the compact. What we see is, anyway, that in regional African trade, the share of finished products is much higher. So I would like also you to comment on where do your products go and what does that mean for value added? And maybe to be provocative again, would it be more sensible for Africa not to go into the direction of global value chains, but maybe regional value chains? Okay, I realize that I'm speaking too long, so I will be shorter. Third point, we see currently that the wind is changing very much in international trade. We have the trade war between the US and China, or we have tensions between the US and many countries. And does that mean that there is maybe a new good reason for the EU and Africa to work closely together? And I think these are the 3 points. I will come up with specific questions now. And sorry for being so long. So let me start with you, Hans-Peter Lankes, to give us a little bit of a background. IFC has recently made an analysis of investment into the compact countries. Could you comment on these trends and show us a little bit what is the link to trade and how that can impact on trade patterns?
Yes, thank you very much, Evita, and thank you for having me here on this panel. Just a couple of points. As you say, IFC published a study of investment trends into the compact countries and into Africa in general, and it tries to find patterns in this. We presented that at the Compact for Africa meeting at the annual meetings of the World Bank IMF just 2 weeks ago. And there's some fairly striking trends. One is that the compact countries over the past 5 years have seen foreign investment grow by 40%, while Africa as a whole has seen foreign investment shrink by 40%. And that is a stark contrast. It reflects the fact that Africa is really running on 2 tracks. You have a very successful Africa that has been growing fast for a number of years, that has been taking very forward-looking policies which have led it to join the Compact. We have to remember the Compact didn't come out of the blue. It's not sort of a situation where countries suddenly decide, okay, I'm going to pursue certain policies. They have been in that policy track, and they have actually been growing fast. And that Africa has been attracting foreign investment. And there's another Africa which is in a much more difficult situation. Partly it's to do with commodity prices, but partly it is to do with fragility, which you find regionally concentrated in some parts of Africa. So the compact countries have been successful, and I think the fact of the success reflects the reasons that the compact exists. Now, a second trend that we see is that manufacturing investments now dominate in numbers. They do not yet dominate in volume, in value terms. That is still natural resources, construction, but they dominate in numbers. That means that there are now many typically medium-sized or smaller projects in manufacturing in the compact countries, and that gives a lot of hope. And here comes the connection to trade. Manufacturing investments tend to be heavier in terms of their linkages and their need to link into global value chains, and therefore they depend on the trade environment. The fact that we see more manufacturing investments into Africa is a good sign, and it is a good sign for trade. At the same time, it is a sign that Africa will begin to gradually localize production and value added into their economies. We heard this earlier here today. That is very important that we get there. That, of course, would mean that the nature of trade, of external trade patterns, will also change. You were referring to the intra regional trade in Africa, that has boomed, actually. This is really going up, and that, again, is a very good sign. Last point on this, link between trade and investment. We have organized a variety of investment roundtables in the context of the compact over the past year in different places, including in several African countries. And one very, very strong message that we hear is we need a large market. The fragmentation of African markets is the biggest impediment to investment. So the Continental Free Trade Agreement that is in the making is something that can be extremely useful. And it's not just trade policy fragmentation, it is also fragmentation in terms of the infrastructure for trade.
Yeah, thank you very much. You said there is some hope and that the prospects are quite good to have more value added in Africa, looking at the investment that you analyzed that is now coming into the compact countries. But you also said that in the other African countries, the prospect is not so positive. So I wonder, and Minister Chancellor, I would like to pose you the question, after what we just heard, does this underline that internal reforms are somewhat the most important thing if you want to reform the structures of your economy, if you come to more value added? And what is your position to that, or what is Benin's situation? If you're looking at an export or development strategy, because exports is for the government, it's part of a development of a larger strategy. If you look at that, where do you situate internal reforms? What is the importance of trade agreements, of regional integration, and what do you do to come to more value added in Benin as a small country?
Mm-hmm. Well, thank you very much. Thank you for the question, also for the opportunity to address some of the issues here. Let me say the rest in French for my French colleagues here. C'est vrai que la mauvaise nouvelle pour nous, c'est le niveau de la part du commerce extérieur des pays africains dans le monde global. Mais c'est en même temps une bonne nouvelle parce que ça veut dire, comme mon collègue de droite de AFC vient de le dire, que dans les pays où il y a des réformes, il y a une opportunité. Et nous prenons cette ligne. Vous avez entendu ce matin le président Talon élaborer sur certaines des réformes. Il faut absolument engager des réformes structurelles pour booster l'économie et bien sûr les investissements et le commerce extérieur. Bien sûr, ces réformes-là portent sur tous les secteurs, le marché de l'emploi, la compétitivité, qu'on appelle les réformes fiscales et tout ça, mais aussi des investissements en matière d'infrastructures. Tout ça doit aller ensemble. C'est pour ça que chez nous on dit il faut réduire le gap en infrastructure, mais en même temps accompagner cela dans des réformes tous azimuts, parce que des investissements en infrastructure sans les réformes ne donnent pas les services dont nos populations ont besoin. Maintenant, un pays comme le Bénin, c'est une porte d'entrée pour l'Afrique de l'Ouest. C'est une porte d'entrée pour un pays comme le Nigeria, avec près de 200 millions d'habitants, mais c'est une porte d'entrée aussi pour les pays de l'Hinterland, comme le Niger, le Burkina Faso, le Tchad, qui n'ont pas d'ouverture sur le port, qui n'ont pas d'ouverture sur la mer, et donc qui ont besoin d'un autre pays comme le nôtre pour importer. Et c'est pour ça que nous faisons des efforts pour justement faciliter et le commerce et les services en direction de ces pays-là. Donc notre ouverture fait en sorte que nous sommes obligés de nous engager plus activement que tous les autres en matière d'intégration régionale. Nous sommes membres de l'Union économique et monétaire ouest-africaine, nous sommes membres de la CEDEAO et nous sommes membres bien sûr de l'Union africaine. Sur tout cela, il faut effectivement que pour l'ensemble des pays africains, on regarde tous les arrangements auxquels nous participons. Parce que ça, c'est un autre obstacle. à l'intégration économique. Quand vous regardez les arrangements auxquels les pays font partie, vous voyez qu'il y a certains qui sont contradictoires par rapport à l'objectif global. Donc oui, il faut les réformes, tous azimuts, à partir des réformes structurelles. Il faut des investissements et il faut faire partie des arrangements d'intégration régionale qui permettent donc d'être mieux arrimés aux autres pays et d'avoir un marché moins fragmenté, comme le disait tout à l'heure notre ami de AFC.
Yeah, thank you very much. You underlined very much the role of structural reforms in all areas, not only infrastructure, but also everything else, let's say, basically. And regional integration as part of the picture, especially also for landlocked countries. I would like to come now to you, Mr. Mévedor from Togo. You're from the private sector, and I would be interested to hear from you reflecting of what has been said before. Togo's markets, how are they placed? What role does trade play and investment, and which markets are really important? Maybe also in connection to the neighbors, as we just heard from Benin. For landlocked countries, it's important to work together with the others. You are also part of a regional integration scheme as Togo. Is the regional market very important? What role does the EU play? This kind of answers I would like to get from you.
Thank you very much, Madam, for this question. You are right. As the Minister Biuchane just said, Benin also is actually a gateway for a landlocked country as Togo. And Togo, when you look at the map, we are a very longitudinal country, and we are well situated in the, I would say, in the middle of the West African region. Now, all investment that we are promoting is geared toward trade. As you can see, Togo being a small country, it's very difficult that you can have a sustainable, I would say, manufacturing or industry that can sustain just based on the internal consumption. So our market is definitely geared toward actually exporting. Now, the second point that you're making is a valid point. We believe that Togo has all the assets to be actually the entry point for the West African countries. When you look at it, we have, I would say, one of the port with the biggest draft. And I was reading yesterday that, as a matter of fact, as of yesterday, looking at the statistic, the port of Togo is the #1 in West Africa. Actually, we actually surpassed the Nigeria port. So, which means that people are actually coming and using the Lomé as a gateway to actually attain all the many countries in West Africa. Now, also we are actually looking at improve our logistical, I would say, infrastructure to improve on that capacity and attract more trade going toward landlocked countries like Burkina Faso. And I can just mention that we are actually looking at creating a dry port at the border of Burkina Faso to actually facilitate trade. So our main investment, again, I agree, to actually implement and improve and expand on trade. So if we don't do that, there's no way we'll be successful, we'll grow our economy. Our economy is an economy that's based on trade, and you can see it just by looking at, it's a small country, but it's big by its importance and location in the West African economy.
Thanks for making this point, which directly somehow leads to a next question to Minister Nasser. because what you said, that as a small country, all investment somehow is linked to trade, or overall, or above all, mostly is linked to trade. This is probably not the case for Egypt, which is a larger country, and which also has a very vibrant local sector and local investors and local entrepreneurship. So I would be interested to hear from you, what role do your smaller and local companies play in trade? Is trade a thing that is also mainly referring or is mainly done by larger companies or even multinational companies and investment? What is the role of local and smaller companies? And is there also a government policy directed somehow of involving maybe those more into international trade or regional trade?
Okay, thank you, Madam, for the question. Let me first comment on one of the points you started the panel with, which is the free trade agreements. And I see free trade agreements as a bond, a loyalty bond to make a smooth flow for goods and trade and manufacturing things. The second thing that I would take in general also as in Africa, because we manufacture, I'm coming from the private sector actually, so only in the office since 4 months, so we have a lot of exports to many places, and especially to Africa. And I would like to see in my plan, even in the ministry, that we would like to see, to view Africa as a place for investment, not only a source of raw materials or consumption markets. And coming to this point, to have this manufacturing abilities in Africa, of course, even Egypt will go to SMEs, as you mentioned. So we'll take Egypt as an example. Of course, we have large companies, but these large companies, they would be helped so much if they have supply chain, a national supply chain in Egypt. And this is what we are focusing on, because it's easier to invest in, as a national, in the feeding industries, in the component industries, and it will make it more attractive for large companies, for FDIs in industry, to come and to have this platform of supply chain. So we are focusing so much on the supply chain for the large companies and even the regular companies in industry. Also, we are looking for the SMEs, feeding industries, to go for exports. And we are actually forming now trading companies to help small exporters and medium exporters, that they can go to make trading for their production, to have a complete integrated operation.
Yeah, thank you very much. And I would now like to ask Mr. Schmidt from Deutsche Bank, which is heavily involved in export financing in Africa, of course. What changes do you see in recent years with regard to the destinations and composition of African exports? Or maybe also local and regional exports? So I would be interested to whether you see this change in destinations, and also maybe with regard to value added and the composition.
Thank you very much for the question. So let me kick off from a more macro point of view, what we observe as a bank. So I think what we see, and this is generalized because obviously Africa is a highly diversified continent, so I think what we discuss here is high level. So of course you have differences throughout the continent. So generally we see a lot of momentum. We see quite a bit of growth in the markets we are active in. We see new markets evolving, and that follows more or less, well, the principle that initially probably there was a lot more export finance, trade finance in countries which are resource rich. We see a certain trend towards the east that these markets are developing as well. So we see a lot more business, leave alone of course the north. Egypt, we all know that Egypt is a huge market for trade and export financiers. We talked today or heard about the mega projects in Egypt, where we are one of the leader ranges as well. So I think there's a lot of potential as well. So generally, I think we see a lot of momentum. Second, I think we see an improvement in governance and the framework, at least in the markets we are active. But we also still believe this needs to continue. I think it's very important for a financier to find a sustainable environment in terms of governance and also regulation. So that's another trend. We see positive tendencies, but still a lot to do on that side. And generally, I think banks have been involved heavily in infrastructure finance, and I think this, obviously, I think is the agreement among the panelists as well. You need a good and solid infrastructure to then build basically everything else on top. And throughout the years, I think we arranged some 10 billion in the region throughout the last couple of years. I think most of it was infrastructure, energy, water, health as well. And it was primarily sovereign. So obviously what needs to develop still is probably the private sector. And again, coming back to my first point, I think you need a certain framework that you can basically support as an international bank, this part of the business, because if you do project finance and so on, I think you need a clear legal and regulatory environment. So that's basically what we observe in the region, but Africa is one of our core growth regions by definition. And basically we support the countries on the ground, obviously, but also our exporting clients. Coming back to the location here, Berlin and Germany, I think what we observe, looking at the business composition, I think we have a long way to go from a German perspective. Most of the transactions we've done in Africa are not out of Germany, but out of other European countries. And I think with the decision of the government now to reduce the retention for the Hermes-backed financing is a good step forward. But I think still we have a lot of upside potential for German companies, because we only can finance if we have a German company exporting. So basically I think there is a lot of upside potential.
Thanks a lot. I would like to come back, you also underlined that, to the question of framework conditions. Now, the Compact of Africa, one of the ideas is basically to support reform, economic reform, and thus to improve framework conditions for trade and investment. And Hans-Peter Lankes, I would like to get from you some examples for policy reforms under the Compact that might be contributing to increasing value added in exports.
Yes, no, as you say, the Compact is, if you want, a platform on which countries have committed to pursuing certain policies. They have put those policies explicitly on the table, and they've said, look, this is what I'm going to do, measure me against it, and showcase me, right? And this gets monitored. And in return, countries expect that the international organizations and other sources of funding are ready to support the investments that would go in to sort of take care of funding needs, to take care of the risk element, which is often an obstacle there. So that is how the Compact functions, and countries have put forward a range, and in different countries, very different ranges of policies that are that they feel are the most critical to developing the investment environment. So there are quite a few of these policies that have an impact. Now, more generally, it's the macro environment, and it's important in each one of the countries. It's the macro framework in which they commit to operate. It's the measures that have been taken under the macro framework. That's a core condition for any investment to take place. It's also a core condition for trade not to be distorted by a variety of factors. So that is that you find really across the Compact. Another element that you find across the compact is targeting of investment impediments, or what I would call, what we call it, the IFC, the doing business environment. So you find that across the board. And looking at how the compact countries are performing against these commitments that they have made, there has been really very impressive progress. So we've counted, maybe you're familiar with this doing business report that the World Bank Group publishes, and we count very specific measures. This is very concrete as to what you do to make it easier to get construction permits, what you do to make it easier to facilitate trade, etc. And there are over 100 specific measures that have been taken by the compact countries over the past year. So this has been a fairly significant step forward that countries have been taking. This is another part of their commitment. Now, if you improve the business environment, you make it easier to trade, you make it easier to build, you make it easier to invest, then hopefully there will be a supply response. That is what we should be seeing over time, with a stable macro environment and a favorable business environment. We should be seeing a supply response, both on the trade side and on the investment side. There's a third type of reforms that you see frequently in these compact matrices, and those relate to PPPs, particularly in infrastructure, because countries recognize, in fact, that was sort of at the origin of the compact. It was the infrastructure deficiency, and how do we get more funding? And we all understand more funding means more private funding, because we're running against debt constraints, fiscal constraints in many countries. How do we get more private funding into infrastructure? And PPP legislation has really taken a big step forward in the compact countries. Ethiopia is one where this is now happening across a very broad range of sectors. And we're probably going to hear from colleagues here from Benin, Togo, and Egypt, where this is the case as well.
Yeah, that's a very good question. We could just hand this question over to Honorable Minister Chene. I think it would be interesting to hear how does Benin live with these reforms. And then maybe let me add another question, because you said the compact gives a framework for reforms, and you named examples. Another possibility to introduce reform is, of course, free trade agreements or WTO membership. All the countries are members of the WTO. So I would be interested to hear of what do you think is the good framework to follow up on value added and investment and trade, put in the context of the question as has already been put by Hans-Peter Lankes. Please.
Well, thank you very much. I think I'll start by seconding really what he said about, what need to be done. First of all, in terms of having the macro right, I think we should start with that. Clearly, I should even say it's a precondition that need to be done. It seemed quite easy, but it's not that easy. Having a low deficit, fiscal deficit, having the inflation right, having your current debt at a normal level, as we can see in several even developed countries, it's not that easy. So first step and precondition the macro side.
That's what I was thinking.
And then second, this is the reform package. I elaborated on that earlier. But thirdly, there are a certain number of things that's included in the reform package, the PPP law, for instance, the land reform is another very important step, because it's really a comprehensive aspect of what could be done in a country. And then you have everything related to the local production. This is one of the, the weaknesses that we have in our countries. The Minister of Côte d'Ivoire elaborated on that earlier when he was talking about cocoa. Benin is one of the largest cotton producers. Yet, we are just exporting what we produce. Just like Côte d'Ivoire has been, the largest cocoa producer, but they have been exporting raw cocoa for years. Just like many African countries have been, exporting, oil like the same way. So the next step we're seeing is really manufacturing of local production, agriculture, but also mines. And this is important because in terms of agricultural production, transformation, it touches on what you should be selling to your country-mate, but also to the neighbors. We have, for instance, as far as Benin is concerned, we have Nigeria as one of our neighbors. Nigeria is 180 million consumers, and they are, consuming every day, and they are consuming exactly what you're producing in your country. So if you can manage to transform what you're producing, then it's possible. And there is no contradiction between selling to the global market and selling to the regional market. I want to touch on that because if you can sell to the global market, it means you are even more competitive in the regional market. And that's the way we are looking at some of the issues in Benin, I should say.
Thank you. I would like to ask this question also to Minister Nasser. And again, or maybe this time more linked with the association agreement that Egypt has concluded with the EU. Does this agreement support Egypt value-added exports? Do you see any progress under the agreement? Is that helpful? Is that something you want to follow up? And what about other trade agreements of Egypt with other countries?
Okay. I think this agreement helped till now Egypt to send or to export to Europe more, as I said, products in its first status or as a raw material. Till now, we didn't really gain from having an added value products exported to Europe. Unless some of the very, let's say, special products that have the labor-intensive component or element, and some of them are extremely successful. For instance, we export to Europe buses, for city buses mainly, because the bus differ from the automotive, from the passenger car, because it has a very intensive labor amount in the production, and with a very high quality. Without this agreement, we would never be able to enter such markets. For us, maybe the quantities in such segments or sectors is not much, but we use it as a symbol to promote the Egyptian industry. For instance, I personally was in this industry. We export to UK about on a year, not UK, for France, for instance, we export about 150 school bus on a yearly basis with excellent quality. We were not able to do this unless under the trade agreement, because with the bus we reached the 40% added value needed for this free trade agreement. What we are working on now is increasing the components that help us in the supply chain to add to different manufacturers and products to be a replicate for this industry. We have also good amount of trade in the white goods, okay, under European brands as outsourcing, but also we are able to do this for the good added value, mainly for, present in the labor-intensive work, for some white goods that use a lot of labor. But till now, we really didn't, and this I think it's our problem, and we didn't go in deepening the national components for different industries, and this is something we are working on it for the coming phase, and by having this supply chain, this national supply chain, in different industries, we can reach the needed added value standard that can help us to go to Europe especially. For Africa, I think this helps us because we can, and this is one of our most regional markets, especially for the COMESA. We can provide our markets or the markets there, our export markets there, with an acceptable product with an acceptable price. So I think we gained also from this agreement. What we are looking for in the coming phase is to have a joint production, European, Egyptian production, manufactured in Egypt on a joint venture on the amount that can help us to go to Africa. Okay, so we extend the portfolio of the products. We go in partnerships with many European companies, which will help. Having the Egyptian component will make the price acceptable. We'll be able to cover more markets in Africa together with our partners from Europe.
Yeah, thanks a lot. Mr. Schmidt, Deutsche Bank, of course, would be in a place to give the kind of credits that would be needed to have the kind of PPPs that Minister Nasser would like to see. Now, what we see currently is that international banks are rather diminishing their engagement in risky markets. I mean, now we heard that compact countries in Africa are somewhat in a better position than others, but I would really like to have your view. How does this sense of reluctance of international banks, how does that go along with the compact's aim of increasing investment and thus contributing to trade?
Thanks for the question. Good question, and I would answer that twofold. One is perception can be reality, but perception sometimes is wrong. And probably there are two aspects which support each of the two statements. I think you have plenty of liquidity in the banking market, and like Deutsche Bank, we are founded based on trade and export finance, so that's something where we can deploy capital and balance sheet. I think there's no restriction in terms of size what we can do. And that's true probably for a lot of our competitors, and sometimes we have the feeling that we even compete with DFIs and other public organizations because they also have to deploy a lot of money. So I think it's not a question whether there's enough liquidity to finance a project. What has been or what has become a lot more complex is what I would call the risk definition. So maybe 10, 15, 20 years ago, you decided on the commercial feasibility of a project, whether or not you deploy a balance sheet to a project and whether you can support it. But the risk definition has been expanded massively by regulation, what we call non-financial risk. So you have to look at a lot more aspects in a project, be it money laundering, know your client topics you need to look at, reputational risk, social and environmental risk. So basically the risk definition has been broadened a lot. And that means that the reason why you support or you don't support a project is not necessarily only a question, is it feasible from a commercial perspective, but do you feel safe with all the aspects I just mentioned? And that's why it's so important that transparency and governance is being improved in certain situations, and I think that's a topic. The second aspect, and I have a colleague in the audience who probably can talk a lot more educated about it. If you look at trade finance and trade finance with financial institutions, obviously I think, Ulf remind me, I think we do business in 150 countries on the trade finance side. However, we don't do with all the banks in the 150 countries trade finance anymore because we can't, what I just described for the reasons, maintaining relationships, having a good insight. You can't maintain the same size of counterparties in that business than you could do before. So you can help in each and every country of the 150, but you probably cannot do it in every situation because you can't maintain an account for a bank which sends you an LC once a year, for instance, right? It's simply not possible because the duty we have from the regulator to make sure that deals are safe and sound, I think they have increased, and we have to make sure that this is being followed.
Yeah, thanks for elaborating on that. And that leads me to a question to Mr. McVedor. And that is, we just heard that non-financial risks are more important today. You're from the private sector. We heard that the compact is working on diminishing risks by introducing reforms, etc. How do you feel that as coming from the private sector in Togo? Do you see this progress? Do you see this kind of progress? Or are there still the problems that you see and that you would ask your government to work on?
Thank you for the question. Yeah, it's true that as the gentleman from Dutch Bank say, there are new risks coming into the economy and the business. So what we're seeing is how the government, by enacting different laws, are trying to actually minimize those risks. Now, what I can tell you, for instance, in Togo, we are having a new investment code, which actually is tailored to making not to hamper trade, but to actually allow trade to happen by giving allow manufacturers to come in the country and being able to manufacture on giving them incentive. But those incentives must be tailored in such a way that you don't kill your own, I will say, tax base, but in such a way that you find the balance in such a way that they can come, also produce and be able to re-export the good produced. So in a nutshell, yes, there are new risks, but also the banks, thanks to the banks and thanks to the government, they are also enacting laws to address those risks that we are seeing. There's no question about it. There's no risk. There's a new environment, a global environment. We need to go and win those markets, and that's not going to come without actually being able to master the risk that you're seeing in your economy. Thank you.
Thanks. So you also came up with a positive note. And after so many positive notes, I want to thank my panelists for this discussion and thank you for listening. And I think we come to the closing session. Thanks a lot.
Dr. Schmig, thank you very much. Another round of applause for them, please. Right, and as she said, we've come to nearly the end of the program. And in order to make sense of what this entire day was about, I'd like to invite three gentlemen on stage with me. To begin with, Dr. Ludger Schuknet. I'm going to butcher your name, I'm so sorry. He's a Deputy Secretary General for the Organization of Economic Cooperation and Development, or OECD. Please take a seat. I'd also like to invite Sean Nolan, who is a Deputy Director, Strategy, Policy and Review in the Department of the International Monetary Fund. I don't see him. And finally, Mr. Christoph Kannengieser, who is the Chief Executive Officer, German African Business Association, or Afrika-Verein. All right, so ladies and gentlemen, I'll try and make this short and sweet. And so we'll begin with you, our host, Mr. Kannengieser, because, Dr. Evita said before she left that these summits, she was asking, are they just talking shops? So how do you assess today's G20 Investment Summit? Are your expectations met, or do you still think there's room for improvement?
So what I think is that is simply a milestone here for Germany and German Africa policy. as we had 11 heads of states with us, we had the Federal Chancellor with us, we had about 200 companies present in this room, and we never had that before. And we have heard the announcement of the federal government to implement a development investment fund with round about 1 billion euro to support German companies, German medium-sized, smaller companies to invest on the African continent, and this is exactly what we need. We have a lot of multinational companies already rolling out activities on the African continent much more strategically and intensively than they did before. But what we need now is that the Mittelstand, the hidden champions, these family-owned companies discover that Africa is as well a market and an investment destination for them. And therefore we need this political support, and therefore we need events like this today, which my team has organized fantastically. Thank you very much for that. We need not only events here in Berlin, we need kind of a roadshow all over Germany just to show up what's going on and what kind of political support is possible, which not has been the case before. So for me, today, the 30th October 2018 is the beginning of a new period in German Africa policy.
I quite like that. So let me come to you, Mr. Shuknet. We heard earlier, before we went on the break, from the Economic Minister of Guinea, Mr. Mamadi Camara. He said that your organization is actually registering higher trade volumes than the intra-trade that we're seeing at the moment. So what can your organization contribute to further encourage investment and jobs in the CwA countries?
Yeah, thank you. I'd like to, if I may add a little comment to what Mr.
Absolutely
said, because first of all, I think it was an excellently organized event by your colleagues and all the contributors from the ministries, and I'm very happy that I was here. I think it also shows that the Compact initiative is working, because, you know, the initiative was meant as a commitment device. By having all these players together, the private sector, the governments in the G20 countries, the governments from the African countries, the international organizations, you know, this kind of raises the stakes. It raises the stakes in terms of the potential for success, but it also raises the stakes in case, you know, people, countries, participants don't deliver. So I think it's showing that, you know, it is making a difference, and the visibility that we are experiencing here. I mean, compare that to an, I don't know, maybe to an Africa event a few years ago. You know, the kind of visibility we are having here is really great, and we are seeing that also. I was in Bali for the annual meetings and for earlier meetings. I think this is key, and it's key also for getting the private sector convinced that something is changing. So, and with the focus here on deals, on jobs, I think, you know, this was really crisp and fast, especially in the morning. And this gives optimism, you know, that it's not just a talk shop as we have many over what needs to change, but that we see the change happening. So what can be coming next? I think, you know, I'm now with the OECD, not with the Ministry of Finance anymore, where I was one of the founders of the Compact Initiative. I've been thinking very much, you know, what are the things that could make a difference from the organizations? Because, I mean, Sean is here for the IMF. We have the World Bank. We've had the World Bank on the previous panel. You know, what can the OECD contribute? And I think it is something very important because, you know, the OECD is providing a number of global standards. Most of you probably know the standards in the tax area where, you know, BEPS and the information exchange is globally now contributing to fight tax evasion and to give lots of additional revenue to developing countries. But there are other very important standards which contribute to this idea of the investment environment, to the level playing field across countries. And that's, for instance, standards on the behavior of multinational enterprises, the behavior in the context of export financing, the behavior in terms of the investment environment. And these standards, that is something the OECD can really contribute to this initiative, and where I, as the Deputy Secretary General, will contribute to pushing this. And it complements, I think, very well what the other international organizations are focusing on, the IMF with macro, and I don't want to steal Sean's thunder there, but the IFC with the private financing. This is something that the OECD is standing for and will collaborate on with the international organizations. And it's not only the African countries that need to follow these standards. We tend to forget that there are countries in G20 like China and India which also have not yet subscribed to some of these things, like the Anti-Bribery Convention and things like that. So my idea would be to also get these countries to sign up to the best practices, to the global standards in the international environment. And I think this is the real difference the OECD can make here.
Okay, so creating a level playing field by allowing these CwA countries to join the core standards. The IMF representative has been mentioned quite a lot. Sean Nolan, what do you think your organization can do to encourage further investment?
I think what the IMF does is rather well known. As a number of speakers have emphasized, the compact from its original design has always had three pillars. A sort of a macroeconomic environment component, a business environment, and then a financing component, three different legs. The IMF's responsibilities lie very much in the first area. As a number of ministers have emphasized, achieving macroeconomic stability is not easy and can also be easily lost, but we have very close relations with all of the 11 compact countries. We have actual programs, lending programs with 9, or arrangements with 9 of them, and probably 10 again soon. And so in each of these countries, we're intensively engaged on macroeconomic policy advice and financial system advice. And we'll continue, that's in a sense our bread and butter, our core business, and we will continue with that in each of the compact countries, as we do in many other countries in Africa. There are a couple of areas where I think we're probably placing a lot of emphasis that I think is particularly relevant for the private investment context. One, ironically, is perhaps looking at it indirectly, is domestic revenue mobilization, building tax bases. If there's a self-evident truth, it's that most African countries will need, most developing countries generally, need substantially more resources to invest in infrastructure, both social infrastructure and physical infrastructure. So building a tax base is sort of absolutely an integral part of the picture. And the other area I think I would emphasize where we're doing work that is in seeking to build state capacity, whether it be areas like financial sector supervision, but also public investment management, and also PPP assessments. The issue of PPP laws becoming more common was, I think, mentioned in the previous session, which is, of course, a good thing. But PPPs, the devil's in the details, and it's important that governments signing on to PPPs that have maybe 20, 30-year obligations associated with them have indeed thoroughly understood and analyzed what they're doing. That's an area where we're also providing significant technical assistance. So let me stop there.
Thank you, Mr. Nolan. Mr. Shuknet, Dr. Shuknet, I'm going to come back to you now. This CwA initiative, of course you know this better than us because you were part of the team that conceptualized it, was always envisioned as a short to mid-term project. And of course we know it was launched under the G20 presidency of Germany, but now that's going to shift to Japan. How do you envision this advisory group under a new presidency?
Yeah, this is a very important question. I never thought this was a short to medium-term initiative only because, I mean, this is something we are in for the long haul. This is, to improve the investment environment, to get the credibility, and then to have the investment materialize on the ground. It takes time. So it is very important that Japan continues with this initiative, and they have promised to do so. And in Bali, I was still at Personam, the advisory group co-chair, I fought and argued very strongly for this, and they promised that they would do this, which means, to my mind, that the Japanese have to give this initiative enough face time for African ministers and African representatives in the events of the G20. I hope that the Japanese will do that. The Japanese have already promised they will want to do an investor conference also in Japan next year, and I would hope they make it as deal-oriented and as well organized as this one organized by the Afrika-Verein. And it means also that we will need to monitor. We will need to monitor what is actually happening, because, you know, the commitments are only worth as much as they are implemented on all sides. And this is a slog. I mean, this is not something that will happen automatically. There's hard work. And I think the great thing about this is that the IOs, the international organizations, the members of the G20, and the representatives of the African countries have formed a team. They have been forming a team in this. And, you know, I've met here like half a dozen of my friends and colleagues from the initiative here, and we've exchanged views and chatted. And this is very important. And it is very important that in the Japanese presidency, the work on the ground, where the IOs are very important, is intensified, because really it needs to happen in the countries, that the fragmentation of all our activities that has been undermining the quality of development work so far, that this stops and that there's better coordination, where companies that want to invest there also have contacts on the ground to deal with problems. It's important to have it here, to have the support here, to have the programs here, but the work has to happen on the ground in the countries, and we still have to make progress on that.
All right. Christoph, I'm going to come to you because I saw you ruffling your papers. I believe you're ready for my question now. We saw quite a number of countries represented here outside the 11 CwA countries. What can you say to them, you know, as a message after this summit today?
The Africans.
Yes. Well, yeah. Africans and others alike.
So, yeah, first of all, when we look at other countries within the industrialized world, the message is that Germany is keen to close the gap. We have had a fantastic conference here today. We have signed for about 500 million euro new projects in Africa. There will be an increase in direct investment of about 10% this year, but there is still a gap to close. Germany is not among the first countries to do direct investments in the CwA countries. So we have to work hard to close the gap, for instance, to our friends from France or from the United States. But Germany is on its way, and the same message is for the African countries. They are asking us, when are the Germans coming? And my message is now is our moment to discover these African markets and to be much more visible on the ground over the years to come. That's, I think, one of the assets of the previous government and the current government, that they have really realized kind of a mindship and adopted a new paradigm in German development and foreign trade policy. And I think this is good news for everybody. Just one short remark. We are very much focusing on the CwA countries here today, and I think it is good that the initiative tries to focus initiatives on reform-oriented countries. But I think we have to keep Africa as a continent as a whole in our mind as well. There are interesting countries as well outside of the CwA scheme. We know a lot of them. Kenya, for instance, Tanzania, Uganda. They are all not part of CwA, but German companies being active in these countries also need good framework and public support with their activities. So let's realize the compact with Africa, but let's not forget that Africa is much greater than only 11 countries.
All right, so I'm going to toss the same question back to you, Mr. Nolan. Traditionally, the investment relationship with Africa has been that of a carrot and stick, where the carrot has been the investment and the stick has been the reforms. Is that the model here?
That is certainly not how I would describe it, so let me try maybe recast it. But before doing so, I just would like to echo Ludger's point that this was never seen as a short-term initiative. This is something that is designed, hopefully, to yield results in the coming years, but in a longer-term context as well. As many of you know, certainly if you look over the next 30 years, more than half the increase in the global labor force will be in Africa. So the employment challenges and the growth and production in Africa is something that will be out there for a long time, and therefore the challenge of generating investment will be there as well. As regards engagement with other countries in the compact, I think we've always stressed from the start this is an open initiative, and therefore it's very much open to other countries to participate. All, in a sense, obviously for ourselves, in particular the IMF and the World Bank, as international institutions with 190 members, we could hardly treat one member differently from another. You mentioned the carrot and the stick. I think the way I've understood the compact right from the start was actually a deal. It was a commitment on one side and a commitment on another side. So in a sense, it was a quid pro quo, might be a better term than carrot and stick. And in a sense, I think this was certainly the ideas that Minister Schäuble emphasized at the outset, that indeed countries that were committed to taking the right path of reforms should be strongly supported, both politically and economically, by the multilateral development banks, by the G20 and other bilateral partners. So I think that's a better way to see the initiative.
As a quid pro quo, okay.
As a partnership in which both sides, which is the G20 and other development partners like the Netherlands, like Norway, for example, smaller countries, on one side, and the reform-oriented countries in Africa on the other side, working together.
Okay, so then finally for you, Mr. Kandiza, what is next? I mean, you've been praised very highly for putting together this event, but in terms of the larger picture, what's next?
So, yeah, first of all, Afrika-Verein is continuing this work, and we do it like we did it before. So we do compact with Africa almost every day in helping and supporting German companies, medium-sized, smaller companies, to face the challenges on African markets. But with this conference, we did nearly a dozen of bilateral meetings as well among German companies and political decision makers from the CwA countries. We will conduct our sector-specific conferences. We are discussing with the Ministry of Minister Müller how to roll out kind of a roadshow all over Germany. You know, Germany is a very decentralized country. When you do a conference like this in Paris, you have everybody in the room. In Germany, you have to go to Munich, to Frankfurt, but you also have to go to Heilbronn or to Bielefeld, where the hidden champions are sitting. And so it is hard work to do, but we are keen to do this work in collaboration with partners from the business communities, our member companies, which are already very active and very successful in Africa, and the German federal government. And I'm quite convinced that another part of hard work has to be done. The implementation of what Chancellor Merkel announced today might be a bit tricky. It is relatively simple to say, here is 1 billion euro to support medium-sized companies in Africa, but to implement it in a way that, that it is part of the reality of the daily life of German companies. It is not as simple as that. You have to implement smooth bureaucracy. You have to implement good consultation processes, and this is the kind of work we have to do as Afrika-Verein over the next weeks.
Well, thank you very much. On that positive note, unfortunately, I do have to keep time and wind this up. I have to say thank you to you all, just to let you know and remind you what you are witness to today. 4 MOUs have been signed in front of you today with a total project volume of 500 million euros. This will potentially trigger jobs of in the thousands. I think we saw the numbers this morning. And based on the CwA monitoring conducted in April 2018, reform champions are currently Ethiopia and Ghana, while the report published this October shows that Senegal, Rwanda, and Ethiopia were the most active in monitoring their reforms. I'd like to thank my panelists seated with me right now, Dr. Ludger Schucknecht. I'd also like to thank Sean Nolan and Christoph Kanengiser. From me, Edith Kimani, thank you so much for your patience. I leave you with the Swahili way of saying goodbye. We say kwaheri, which literally means go to luck. And I think after today, there's a lot of work to be done. We will all go to luck. Thank you very much.
Just a second. Just a second. Just the last word. I wanted to ask you to give a round of applause as well to our wonderful moderator of today. You have done a fantastic job. Thank you very much for that.